to buy a house and you read, credit score plays a role. Well, today I'm going to talk to you about different strategies and a process or an approach to help improve your credit score. Now, I am not by trade, by law, a credit expert, but as a mortgage lender, I have tools and strategies that I can at least pass along to you that I believe can help you. My name is Aaron Benton. I'm a local mortgage lender and host of this channel. I encourage you to subscribe below and tap the bell for notifications so that you're the first to know whenever I release a new video. I get calls, emails, texts every day from people just like you looking for home financing advice. So whether you're looking to purchase or refinance in a week, a month, or even a year, reach out to me so that we can build a plan tailored exclusively for you. But today, we're going to talk about how to improve your credit, and we're going to get after it right now. So what I'm about to tell you today, you can kind of go in two different directions. The first direction would be to talk to your mortgage lender, hopefully me, up early in the process. I mean, I encourage people to engage in the lending conversation. If you know you want to buy a house, I encourage you to think about talking to the mortgage lender 4, 6 months, sometimes in a year, well in advance. Getting a credit report is very, very helpful. Not saying that you've done anything incorrect, but you want to know, did something slip through the cracks? Of course, your mortgage lender has access to pulling a credit report and can share that with you and can also assist you in improving credit. Now, the first thing you need to know is what's on your credit report. So again, your mortgage lender can help you, or you could go to annualcreditreport.com and you're allowed one free credit report every single year. So you could dive in and check that out. Now, understand that credit report, when reading through it, it's going to show you credit card balances, it's going to show you maybe some installment loans for vehicles, student loans. Understand the credit report is a snapshot in time based on when the creditors report to the bureau. So sometimes I will pull credit on, say, the 15th of the month, and the bureaus report on the 30th of every month. So the data is not necessarily 100% accurate or up to date. Maybe there's a 15-day or greater lag time. Nevertheless, you can take that information and update the credit report with your lender to make sure that it is up to date. Now, that credit report is going to show the credit card balance. It's also going to show the minimum monthly payment that is due. And those auto loans, those are installments, closed-end debts, anything that you see on a closed-end debt, little trinket for you. If you see that, and if you see an auto loan or a closed-end debt, and your number of payments is less than 10 months, so you have less than 10 payments remaining on a conventional loan, you can omit that liability from your debt to income. So I know that's not regarding credit, but it is a little trinket of how loan officers can be creative in facilitating a positive or a better debt to income ratio for you. If you have less than 10 payments on a closed-end debt installment loan, that payment can be omitted from your liabilities, your debt to income. So you're gonna look at your credit card use in terms of the monthly minimums. You're gonna look at your installment use. You're gonna look at, have you been making payments on time? So the credit industry is very, it's hard for your score to go up and up so quickly. Understand, buying a house comes with an interest rate, and the lower the credit score, the worse the interest rate. So your goal, of course, is to have the highest credit score possible, which in turn will give you the best interest rate possible. So with that, it's important to continue to make your payments on time. The minute that you miss a payment is the minute your score will dive, and it will dive quickly, and it can take you about a year to recover just from that late. So understand, what do the credit bureaus, Experian, TransUnion, and Equifax, those are the 3 bureaus, look at when they are determining your credit score? Well, one is timeliness, or length or history of credit use. So I see it many times with first-time home buyers. They're very young, and say they're 21 years old, maybe they're only 19, and they want to buy a house. Well, they haven't had much of a chance to be introduced to the credit world, right? If they're 19 years old, you can apply for a credit card at 18. At most, in that case, they have 1 to 2 years of credit history. Well, understand that your credit score is a composition of history. How long have you established credit? So one technique or strategy that I can give you is to become an authorized user on say a credit card. Now the minute that you become an authorized user, you would inherit that entire trade line's past history. So one strategy that I used when I grew up, my parents put me on as an authorized user. My parents are in their 60s, I am not. The beauty of that is, in terms of the credit world, I look like I was making payments as if I was a 60-year-old person on that credit card. So that is a little tip. If you need a bump, look to add yourself as an authorized user. Now remember, on that trade line, you are inheriting everything. So if that card that you are being added as an authorized user has a late or anything of that nature, something negative, you will also inherit that. So be careful and ensure that you are being added as an authorized user on a trade line that has nothing but positive history. So that is one way to turn somebody who is younger in the credit world to look a little bit older by acting as or being added as an authorized user. Another piece is the credit bureaus look at credit usage. The goal is to have 30% of the high balance. So with that being said, if the credit card limit is $1,000, you don't want to have more than $300 on that card. Ideally, you would pay that balance off on a monthly basis, but you do not want to carry more than the 30% balance. If you do, you're going to notice that your score starts to deteriorate and eat away over time because your credit usage is above what the credit bureaus would deem a kind of excessive. And so that is another strategy, is just keep your spending in check. And that could be, I've had people call their credit card company and just ask them to increase their limit, and suddenly that card now falls within what the bureaus would deem acceptable. Another option, now again, this is where your mortgage lender can be very helpful. We have tools, we have strategies. We are not the experts. I do not know exactly every time how to give you tailored advice, but I have technology. I have what is called a what-if simulator. So what that simulator allows me to do is kind of plug and play. If you do this, what will happen to your score? Sometimes it's just an adjustment to the balances. Maybe I move some money from one credit card to the other. Maybe I pay off some debt. The what-if simulator is very, very, very important, because if you know that you need to improve your credit, and it could potentially cost you money by paying credit cards down, reorganizing your debt, you don't want to go in blind or aimless. You don't want to cough up $1,000 on something that might not actually help you. So it's very important to, when you talk to your lender, you could talk about a what-if simulator and what you could do to systematically and very tailored approach to improving your credit. Therefore, you know any money that you spend is well spent and spent appropriately. So the big takeaways are, A, when you get that credit report, you gotta review it. You gotta make sure that it's accurate. Check if there are any lates, collections, things like that, that maybe there's some infamous trade lines that you never heard of or never are unaware of. It's important to know what is actually showing on your credit report. Again, interest rate plays a role, or credit score plays a role in the interest rate that you get. And as you know, interest rate dictates payment and total interest paid over the life of the loan. So it's worth it to take the time to understand what is actually on your credit report so that you can be prepared for the future. So get that free credit report on an annual basis. Do yourself a favor and just read through that, make sure everything is in check. Now again, if there is something that is not in good standing, you can call Experian, TransUnion, Equifax. Get that resolved so that when you are ready to purchase a house, everything is in line. Nothing is more frustrating than if you're ready to purchase a house and you find out kind of late in the game or when you're ready to make an offer that, wow, I did not actually know that my credit was impacted. Something happened. I had fraud, I had this late that I was unaware of, and suddenly you turn from a very happy person who's put a lot of time into wanting to buy a house to, wow, I've been potentially set back a little bit. Sometimes it doesn't necessarily matter from a qualification standpoint, because understand that Fannie Mae and Freddie Mac in 2025, tail end of it, they passed a new rule, credit score, there is no minimum credit score to qualify. It used to be 620, now it doesn't exist. However, you still got to qualify through the automated system. So if you're thinking you're going to put down 3% and have a 500 credit score, it's not going to work. You're not going to get an approval for that. I mean, certainly a greater down payment. But really, dive into the credit, understand what's going on in your world. My name is Aaron Benton. I'm a local mortgage lender and host of this channel. I encourage you to subscribe below, tap that bell for notification. I really, really enjoy talking about these topics. I come across a lot of people every day, and some of them are really sharp on the credit. They understand what's going on. Other people, they need guidance, and there's nothing wrong with that. I am here to help you. I hope one day to get to meet you, but if not, I'd love to at least see you on the next video.